Welcome back to Investing Talk Podcast. We're the place where we unpack complex topics, pull out the key nuggets from our sources, and we'll basically give you that shortcut to being genuinely well-informed.
Exactly. With hopefully some useful facts and maybe a little insight you hadn't considered.
Today, we're zeroing in on a company really making waves, generating a lot of buzz in that electric vertical takeoff and landing space, the EV ETOL sector. That company is Joby Aviation. And the big question, the one you've asked us to tackle, is pretty straightforward. Is Joby a good time to buy right now?
It's the question on a lot of investors' minds for sure.
Before we dive in, though, just a quick reminder for you listening. If you find these discussions valuable, please do hit subscribe, like the episode, maybe leave us a comment.
Yeah, and definitely if there's a specific company you want us to look into next time, just drop it in the comments. Your input really does help shape what we cover.
Okay, Joby Aviation. Let's unpack this. We're talking electric vertical takeoff and landing aircraft eVTOLs. Sounds futuristic, almost sci-fi, right?
It really does.
Yeah.
But it's becoming very real very quickly. And Joby, well, they're positioned right at the forefront, trying to make this urban air mobility thing happen.
And what makes them stand out in this, emerging field?
Well, what's really fascinating, according to our sources, is that Joby is seen as maybe the front runner in the pre-commercial U.S. eVTOL space. They're not just tinkering with prototypes.
Right.
They're aiming for full-on commercial air taxi services. And a big part of that view comes down to their really early engagement with the FAA.
Ah, the regulatory side.
Crucial, absolutely crucial. Plus, they've lined up multiple strategic partnerships. These are seen as key differentiators, setting them apart.
Okay, so for you listening, we're going to dig into their financials, look hard at their market position, their competition, and what the future might hold, all to help you answer that key question. Is now the moment to consider Joby?
Let's do it.
All right, let's start with the hard numbers, the fundamentals. What do the financials actually tell us about Joby's health right now?
Okay, looking at the fundamental analysis. For the fiscal year ending December 31st, 2024, Joby reported total revenue of $3.7 million.
Which sounds small for all the buzz.
It is small, and it's important to understand where it comes from. It's not passenger flights yet. This is pre-commercial activity, mostly tied to contracts they have with the U.S. Department of Defense.
Got it. So early validation, but not the core business model yet.
Exactly. And the flip side is the operating expenses are really high. I mean, very high. You've got massive R&D costs, plus all the money going into the certification process.
Which leads to?
Which leads to a pretty significant net loss. For FY 2024, that was $454.3 million.
Yeah.
And the latest update for Q2 2025 didn't report any material commercial revenue either. The focus remains squarely on getting that FAA-type certification and developing the aircraft.
So negative margins are basically just the cost of doing business for now, until those commercial flights actually start taking off.
Precisely. That's the expectation right across the board. Negative margins are likely to stick around until they get that type certification and commence commercial operations. And right now, the timeline for that looks like 2026, maybe later.
Okay. And management hasn't given any specific guidance on future commercial earnings yet as of Q2 2025?
No, not yet. Which leaves investors, waiting. And it raises that really important question. How will their cash flow hold up during this long, capital-intensive development phase?
That's the million-dollar question, or rather the near-billion-dollar question, maybe. So what about their overall financial health? Cash on hand, debt?
Well, that's actually one of their strengths. As of June 30, 2025, Joby had a robust $991 million in cash equivalents, and marketable securities. That's a solid cushion.
Nearly $1 billion, okay.
And another positive point, they've stayed largely debt-free. Minimal leverage, which is good.
But there's usually a but.
The but is the cash burn. They have negative operating cash flow. They used $366.2 million in operations just in FY 2024.
So doing the math.
Yeah, based on that current run rate, their cash runway, how long that $991 million lasts, looks like it extends through late 2026.
Which lines up with their target for starting operations.
It does, but that's assuming, no major cost increases or unexpected big investments pop up.
Right. So for you listening, it's a strong cash position, but it's definitely not infinite. That 2026 timeline isn't just a target. It feels like a pretty firm deadline financially.
It really does put pressure on hitting those milestones.
Okay, moving beyond the balance sheet, this is where it gets really interesting for me. How does Joby actually stack up against the competition? Are they really leading the pack in this flying taxi race?
Well, based on the sources, Joby does maintain that front-runner status, particularly in the U.S. pre-commercial space. And again, it circles back to that early FAA engagement. Getting ahead on the regulatory front is huge.
And the partnerships, you mentioned those earlier.
Yes, absolutely key.
Huh.
Think about Toyota bringing world-class manufacturing know-how. That's critical for scaling up production efficiently. Then there's Delta Airlines.
Right, a potential major customer and operator.
Exactly. Potential operational networks, maybe even integrating into Delta's existing booking systems down the line. And then the defense contracts provide not just some early revenue, but also valuable operational testing and experience.
So it's this combination, the regulatory progress, the big name partners, and the deep pockets that sets them apart from maybe smaller startups.
That's the argument. Their early mover advantage combined with those capital reserves does differentiate them from many competitors who might be struggling on one or more of those fronts.
But they're not the only game in town, right? Who else should we be watching?
Oh, definitely not. It's vital to remember the whole sector is still pre-revenue. And frankly, high risk. You've got serious competitors like Archer Aviation, Lilium over in Europe. They're also pushing hard for certification and market share.
So the success isn't guaranteed just based on Joby's current position.
Not at all. Success for any of these players won't just depend on having cool technology. It's about navigating those complex regulations, building out the actual commercial network, the vertiports, the charging, the whole ecosystem, and, crucially, scaling manufacturing effectively. Joby seems well-positioned with partners like Toyota and Delta, but it's still a massive execution challenge ahead.
That makes sense. It's one thing to build a plane, another to build an airline. Okay, we've looked at the fundamentals, the market position. Let's shift gears a bit and look at the stock itself. What are the charts telling us? What's the technical picture for Joby recently?
Okay, switching to technical analysis. In the last 3 months, Joby stock has traded in a range roughly between $9 and $14.50. As of September 2nd, 2025, it closed at $13.38.
So quite a swing.
Definitely. We saw a recent low point near $9 back in mid-July. That level seems to have attracted buyers.
Acting as support.
Exactly. $9 looks like a significant support level recently. On the flip side, the high was $14.50 in late August, and that area, maybe up to $15.20, seems to be acting as resistance where selling pressure picks up.
Okay, support at 9, resistance around 14.50, 15. What about trends? Any indicators giving us clues?
Well, the 50-day exponential moving average, the EMA, which helps show the trend direction, is actually trending upward now, near $11.90. That reflects the buying interest we saw coming off those July lows.
So some positive momentum there.
Some, yes. And the RSI, the Relative Strength Index, which measures momentum, it's kind of in a neutral zone now, between 54 and 59. That's a recovery from July when it dipped below 40 into what traders call oversold territory, suggesting it might have been due for a bounce.
Okay. Anything else? MAMCD.
Yeah, the MEXID is the moving average convergence divergence indicator. It actually showed a bullish crossover in early August, which usually signaled positive momentum building.
I sense another but.
Well, it's flattening out now. That could suggest that the recent rally might be losing a bit of steam or consolidating. And the big caveat here is volatility.
Ah, yes, the wild ride.
Absolutely. Joby continues to show really elevated volatility. Weekly price swings of 8 to 15% aren't unusual. That's pretty typical for these pre-revenue speculative names in brand new industries. It's definitely not a smooth, steady climb.
Right. So technicals show a recovery from the lows, maybe some consolidation now, but underlined by significant volatility. Got it. Now let's talk about recent news and what's coming up. What's been happening lately that could move the needle for Joby?
There's actually been quite a bit of significant progress reported. In September 2025, just recently, Joby announced they are 70% complete with Stage 4 of the FAA type certification process.
Stage 4. Okay, how many stages are there?
There are 5 main stages for type certification, so 70% through Stage 4 is substantial progress. They also mentioned the final assembly of their first type inspection authorization aircraft is underway.
What does that mean?
That's the aircraft the FAA pilots will actually fly for the official testing. They're preparing for that FAA pilot testing in early 2026. So these are tangible steps towards commercial operations.
Okay, that does sound like real headway on the core goal. Anything else?
Yeah, a couple other things. They completed 21 eVTOL test flights out in Dubai, showing some global operational testing. And they started a new collaboration with L3 Harris to explore defense applications more deeply.
Diversifying potential revenue streams beyond just air taxis.
Potentially, yes. Or at least leveraging the technology for different use cases.
That makes sense. But I also heard something about a pretty significant strategic move in acquisition. That sounds like it could change things more immediately.
Yes, absolutely. That was a big one. In early August, Joby announced plans to acquire Blade Air Mobility's passenger business.
Wait, they run helicopter services in places like New York, right?
Exactly. Helicopters, some short-haul jet services. The deal is for up to $125 million. And why it's transformative is that it gives Joby instant market access in premium locations, New York, Southern Europe.
Ah, so they get the routes, the terminals.
Exactly. Established terminals, existing customer base, and crucially profitable operations. This means Joby could actually start generating real significant revenue almost immediately through Blade's existing services, even before their own eVTOLs are flying commercially.
That's a very interesting angle. Buying revenue and market access while they finish certification?
Precisely. Alongside that, they also doubled their aircraft production capacity in California and expanded their components facility in Ohio. So they're also clearly building out the capacity to deliver on their own aircraft pipeline once it's ready.
Urged in July. Was that related?
It seems likely it was part of the positive sentiment. Joby stock jumped over 57% in July. Yeah, on increased trading volume, a big 2-week rally. It was attributed generally to that manufacturing expansion news, growing institutional optimism about the sector, and just general anticipation building around commercial operations.
And did that affect short sellers?
It did. We saw a nearly 13% drop in Joby's short interest during that period. That suggests some traders who were betting against the stock decided to close their positions, indicating maybe a more bullish shift in sentiment, or at least less bearishness.
Okay, a lot of positive developments recently. So looking ahead now, what are the key dates or events you're watching over the next few months? The potential catalysts?
Right. For you keeping track, there are several things on the calendar. September 17th, 2025, that's S&P 500, and ETF rebalancing day. That could impact institutional buying or selling.
Okay.
Then October 23rd, 2025, that's the Q3 earnings release. That'll be critical. We'll be looking for updates on certification progress and especially any initial guidance on revenue coming from that Blade acquisition.
See if that deal is paying off quickly.
Exactly.
Yeah.
November 1st brings the institutional 13F filings. That's when big funds disclose their holdings so we see who's buying or selling. Then around November 25th, expect a holiday travel demand report for key markets like New York City and LA might give hints about Blade's performance.
And closer to year-end?
Around December 15th, we might get an update on Joby's own operational commercial trials separate from Blade. So quite a few potential news points before the year's out.
And longer term, beyond the next few months? Any whispers, rumors?
Well, the big one, the main event, is still targeting those first commercial air taxi operations for 2026 or later, all depending on the FAA. Expanded rollouts with Delta, more military contracts, those could become material down the line.
And the rumor mill.
Ah, the speculation. Look, you hear things, potential partnerships for global expansion, maybe with major transport operators outside the U.S., whispers about maybe, just maybe, an accelerated FAA timeline hitting early 2026 instead of later.
That would be huge.
It would be. And also, occasional speculation about interest from major aerospace or even automotive OEMs, maybe looking at tech licensing deals or even taking a minority equity stake in Joby.
All right.
But these are firmly in the rumor category for now.
Understood. So, lots potentially cooking, but the main course is still that FAA certification and the 2026 timeline. A lot to prove, many steps still ahead.
That sums it up well.
Okay. We've covered the potential upside, the progress, the exciting future, but investing is always about balancing risk and reward. So for you, the listener, what are the major pitfalls? What are the big downsides we need to consider with Joby?
Yeah, this is absolutely critical. Let's talk risks. From a stock-specific view, the number one risk has to be execution risk. Meaning, can they actually deliver on time and on budget? Specifically, any delays or worse, failures in that FAA certification process that could seriously damage the company's value proposition and push back revenue generation even further.
And the cash burn we talked about.
That's the other major stock-specific risk. They are still pre-commercial. They are burning cash, running persistent losses. If development costs spiral, or if that commercial launch gets delayed significantly beyond late 2026, they might need to raise more money.
Which could dilute existing shareholders.
Potentially, yes, depending on how they raise it.
Okay, so execution on certification and managing the cash burn. What about bigger picture risks, sector-wide stuff?
Absolutely. The entire eVTOL sector faces huge regulatory hurdles. We're talking about creating entirely new safety rules, new air traffic management systems. It's not just certifying one aircraft, it's certifying a whole new way of flying in complex urban environments.
A massive undertaking.
Immense. Then there's competitive risk. As we said, Joby isn't alone. Archer, Lilium, Vertical Aerospace, others, they're well-funded, they're smart, and they're all racing for the same milestones, the same markets. It's going to be intense.
And finally, market conditions.
Yes. Like almost any high-growth speculative tech stock, especially one not yet profitable, Joby is sensitive to the broader economy. Think interest rate changes. Higher rates make future potential less valuable today. General investor sentiment, turning risk off, broad market downturns. All these can hit stocks like Joby hard, regardless of their specific progress.
So it's high stakes, high reward, operating in a brand new sector with lots of external factors influencing things.
That's a very good way to put it. Significant turbulence potential, as you said earlier.
Okay. We've gone through the fundamentals, the competition, the tech, the news, the risks. Let's bring it all together. After digging through all these sources, what's the bottom line? What's the overall takeaway for our listener who asked, is JB a good time to buy now?
Well, weighing everything up, the overall rating that emerges from our analysis is a 4 out of 10.
A 4 out of 10. Okay, that's pretty definitive and maybe lower than the hype might suggest. Let's break that down. Why a 4? What are the key strengths and weaknesses driving that specific rating?
Okay, on the strength side, you can't deny Joby's a leader in this space. They have deep capital reserves, which is a huge advantage. They have strong, validating strategic partnerships, Toyota, Delta, DoD. And they clearly have momentum with the FAA toward certification.
So real positives there.
Definitely. But the risks leading to that forward rating are substantial. First, no commercial revenue yet to speak of from their core business anyway. Second, execution risk and regulatory risk remain very high. That FAA hurdle is everything.
And the financials?
And the financials. Free cash flow is deeply negative. Their entire near-term financial health is highly dependent on the timing of that FAA approval and a successful commercial launch. There's very little margin for error there.
What about insider activity? Sometimes that gives a signal. I saw something about the CEO selling shares.
Yeah, there was a recent insider sale by the CEO, but looking into it, it was done under a prearranged trading plan, a 10b5-1 plan. And crucially, the number of shares sold represents a tiny, tiny fraction of his total holdings. So generally, the sources don't view that as a particularly bearish signal in this context, more like planned diversification.
Okay, so not a red flag there. So for you listening, what does this 410 rating mean in practical terms? How should you think about valuation and the investment horizon?
Right. Joby is currently trading at a high multiple of its book value. Its valuation isn't based on current earnings or assets, really. It's almost entirely based on the potential for future commercial success.
A story stock, essentially.
Very much so. Therefore, it really is best suited for speculative, long-term investment only. This isn't a stock for someone looking for steady dividends or near-term earnings growth.
Got it.
The stock's outlook completely hinges on hitting those multi-year milestones we've talked about, especially certification and scaling operations. Short-term traders, they'll face that extreme volatility we mentioned, but honestly, there's probably not a lot of consistent, actionable news flow day-to-day until those big milestones hit or major partnership news drops.
So patience and a strong stomach required.
Absolutely. It is not for the faint of heart or for investors needing returns in the near term. It's a bet on a potential future transformation in transportation.
Yeah, that really does crystallize the difference, doesn't it? The difference between a potentially world-changing technology and a business that's ready for prime-time investment today.
Two very different things.
Well, what a fascinating journey through the world of Joby Aviation. We've hit the financials, their competitive standing in this really groundbreaking industry, the latest news, what's coming up, and importantly, those significant risks. It seems pretty clear that while the promise of eVTOLs is incredibly exciting, putting money into Joby right now is definitely a speculative long-term play. It's heavily reliant on them hitting future milestones, with that FAA certification being the absolute linchpin.
Couldn't agree more.
And maybe a final thought for you to mull over as we look towards this future of urban air mobility. Think beyond just the aircraft themselves. Consider the whole ecosystem that needs to spring up around them.
Right. The charging infrastructure, completely new air traffic control systems adapted for low altitude, high volume traffic, noise regulations, landing sites.
And maybe the biggest hurdle of all, public acceptance.
Right.
How quickly will people feel comfortable hopping into these things for their daily commute? how quickly can that entire vision truly take flight in our city?
Yeah, that's a whole other layer of complexity, something to definitely keep thinking about.
Indeed. Well, thank you for joining us for this insightful discussion. Stay curious, stay informed, and we'll catch you next time on Investing Talk Podcast.